If you wait for lower mortgage rates, you may end up paying more for the exact same house. Let me show you how that happens. I'm Toni Taylor with Interconnect Mortgage, and right now a lot of buyers are sitting on the sidelines waiting for the interest rates to come down. I get it. On the surface, it sounds like a smart move, but what most people don't realize is this. Waiting can cost you even more even if the rates drop. This is not about buying a bigger house or upgrading. This is about buying the same exact home, just at a different point in time. Nothing about the house changes, only the price and the interest rate. Here's what's happening in the market. When the rates went up, builders slowed down, inventory stayed tight, and buyers didn't disappear. They waited. In fact, the average first-time homebuyer today is about 40 years old. It's the highest it's ever been. That tells us there's a lot of pent-up demand waiting for the same signal. So when rates ease, buyers don't come back slowly, they come back all at once. Now, let's take some opinions out of this and let's look at the numbers.
The question is, the million-dollar question is, do we buy now or do we wait? And excuse my handwriting, my kids would tell you they can't read it. Cursive. Anyways, so we're going to make the assumption we're buying a home today for $500,000. Okay. And just for demonstration purposes, we're going to work off of whole numbers. We do down payments as low as 100% financing with 0% down. We've got programs with 3% down, 3.5% down, etc. And to make this easy, I'm going to run all of these numbers off of an 80% loan amount or loan to value with a 20% down payment. Okay, but again, don't assume that's the only way you can buy a house. You can come in with much less down. I just want to keep the numbers easy. So if we do a $500,000 purchase, and that gives us a $400,000 loan. Okay, and then the rate, 6%. So that's going to give us a monthly payment, principal and interest only, not taxes and insurances, of $23.98 a month. Okay, now here's what we know about appreciation in real estate. We've had years, obviously, where things have been off the charts, but normal appreciation is typically 2 to 4%. I want to work this off of a 1% appreciation number. Okay, we're going to be very conservative, and we know the markets have been a little bit more flat, and I want to be very conservative when you run these numbers for you. So if we assume that we are buying this house and 1 year from now, the same house at 1% appreciation, this house would now be worth $505,000. So now I'm paying $505,000. I'm staying with that 80% loan amount, which is going to give me, 80% loan to value, which is going to give me a loan amount of $404,000. And now we waited. So the good news is the rates came down and now they're 5.75%. That's going to give us a monthly payment of $23.58 a month. So $40 difference we saved by waiting for 1 year. That's what we saved on our payment, but we're going to pay $5,000 more for the house. Now I'm going to go another year out here. So we're going to say, okay, we waited 2 years. We want the rate to come down a little bit more. We got to give it another percentage of appreciation, so another 1% on the 505. So now you've got the new purchase price of $510. It's a little bit over that, but we're just going to, again, keep it whole numbers to keep it easy, keep the math easy. Again, 80% loan to value, so that's going to give you a loan amount of $408,000. And the good news is the rates came down again. Now they're at 5.5%. Okay, so we waited, the rates coming down, that's going to give us a monthly payment of $23.18. Okay, so that's $80 difference from if we buy now that we're saving on a monthly basis. But there's something I want you guys to consider. You're paying $10,000 more for the house. You have a higher loan amount. So you're saving $80 in the monthly payment, but it's going to take you a very long time if you put that $80 savings away in a bank account every month to get to that $510,000 back in your savings account. So hopefully you can see that appreciation and that equity is so valuable, and waiting can actually cost you more. Now, if you bought here at the 500, right, and the rates come down to 5.5%, we can refinance you into that lower interest rate. And here's the other caveat. We know that the appreciation historically happens whether the rates stay the same or whether they go up or down. We don't know if these rates are going to come down. We do know that the appreciation historically continues. So we're kind of sitting on the fence and waiting while the prices are increasing, but not even getting a guarantee that we're going to see that drop that's going to give us that monthly savings.
This is where most people are surprised. The math doesn't lie. Even with lower interest rates, the monthly payment doesn't drop the way they expect. And while you're waiting, you're not building equity. You're watching prices rise on the same home you could have already owned. This is the key thing to understand. Rates are temporary. Purchase price is permanent. You can refinance a rate later, but you cannot refinance what you paid for the house, and you cannot refinance the appreciation you missed while you were waiting. This doesn't mean everybody needs 20% down. There are 3% down conventional options, 3.5% down FHA options, and even 100% financing with VA options. The takeaway stays the same. When prices rise, lower rates don't always save you money. Buying a home is not about timing the market perfectly. It's about understanding the trade-offs and making informed decisions. Now, if you're watching this and you're wondering whether you're actually ready to buy or just think you're not, the next step isn't guessing, it's getting clarity. That's why we offer a simple readiness check. No pressure, no obligation, just a clear look at where you stand and what makes sense next. If you want to do that, just reach out and ask for a home buying readiness check. I'm Toni Taylor with Interconnect Mortgage. Thanks for watching, and if you found this information helpful, hit the subscribe button down below. Thanks.